The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks. We're coming back here to the Diagnostic Trading Hour. Let's check out where our markets are at right now. We got the S&P, everything showing quite a bit of strength. And looking for some potential pullbacks on these trades. We got the S&P up right now, 23 points. The Russell's currently up 18, 19 points. Nasdaq's up 59, and the Dow's up 210. Seeing quite a bit of this choppiness and pullback at the moment. So we might be nearing today's highs. We'll be monitoring these trades. We'll get on over at copper, gold, and silver. We got copper currently is up a little over 0.5%. We got gold down about 1.5%. And we got silver right now is moving down. Let's see what we got. About 0.75%. Oil right now up 44 cents on the day. We got natural gas is currently pretty flat. We got looking out over at corn. Corn is up 4.5. Soybeans up 23. Pound dollar right now is down 19 pips. Euro pound is up 9. Dollar freight currently is flat on the day. The U.S. yen we're looking at is up $1.12, and looking out over at euro yen, it's up $1.41 on the day. And then going on into Aussie yen, it is up 82 pips. The Aussie dollar is down 23. And that gives you your current market wrap. Let's go in and check out what news did we have that we need to pay attention to for today. And so let me pull that on up for you. We'll go through it real quick and do a quick review as well on several of the markets. Okay, so let's do a couple quick market reviews and then dive into the news and then look at some potential day trading plans, setups that could be unfolding. All right, so doing some market reviews for you. We got over here just checking out 10-minute MVPs going on. This is an early morning Euro session long trade. It was pretty flat before that, but did give a nice, great MVP long breakout. Very simple trade to do. And big thing, you do want that up close there. And we did get the up close, but I mean, it was pretty much a doji up close, but it still broke the high and went on long for us. If we go in there and check on out, looking at the euro dollar, seeing how it did for us, then let's see, what do we got? We got last night, got an 8 o'clock short, went on down south, started heading on down. You know, and usually I'd give it a couple hours to let the market wake up and open up and get going, but moved on down, had a nice little good short trade for you. But going, actually, I guess that was, yeah. So last night and then going into this evening as well, doing the same thing there. Hopping on into the pound yen. Let's see here. Yesterday was running on up, and then we got a nice evening trade moving on down. Can do some great at-the-money MVP trades. Then about 10 o'clock, giving you another nice long on it. So those MVP trades being really nice if you can do the in-the-money ones, especially or at-the-monies, and just take advantage of those ranges. Checking out some spike strikers going on. So looking on over here, you know, multiple volume spikes. Just because there's a spike doesn't mean we take it. It does pop on up. We get a spike striker sell. As flat as that is, just a dead market, we're still able to go in and, you know, pull out a tick on the trade. Going on over here, looking at this, we got a spike striker buy. Again, flat as it can be, but still able to pull out a tick on the trade. It's done a slightly in the money contract. Oil moving a solid deviation today, running on up, and you see that move right on up to a deviation. Was hoping to go a hair further, had a really nice setup there, pulling on back down, but had a lot of cues to go short. And obviously that deviation move being the primary one. We'll get on over at gold, and on gold we had a nice move there down to a deviation, just sort of chilled out now, right at that level. but just a sweet little move down when it's just sort of trending down for us. Going on into the Nasdaq, and checking this out, we move it up again, a deviation move. So, I mean, we're just getting a great volatility. There's a lot of opportunities in the market today, and hopefully you're able to take advantage of some of these. We got the Russell flying on up a deviation and a half. Not want to be left behind. I mean, earnings season, likes to move those stocks around, and it's doing a good job. Let's see here. We got, we got several things. Well, industrials are really the ones leading right now. AT&T's down. Jobless claims, matching expectations, et cetera, et cetera. So just going down the list. We got the U.S. flash manufacturing PMI. It fell to the lowest low in the last 3 months here since let's see. And then we got, what do we else? We have U.S. yen trading at 2-week highs after their jobless claims comes out. So some good moves going on. Also, we can check out, yesterday's weekly oil inventory report. Let me pull that on up. We'll do the EU. It's had its economic summit going on. And let me just grab our Forex factory chart, and we'll watch it and see how it's going. All right, so on Forex factory, what do we got going on over here? We have, let's see, we had, like I said, EU Economic Summit kicking into gear. That's going to start up. But let's go into the oil inventory report. So let's bring up an oil contract over here. And let's have some fun with those. Let's do a few different things. I want to go in. I want to throw in a spike striker. Let's check that out. This is from yesterday. And we'll also look at the expected moves on that. All right. Let's see here. Okay, looks like the chart's not coming through. Hold on one second. Oh, I see what's going on. Okay, hold on here. Sorry about that. Just get to going sometimes. Let me see. I thought it was in there, but it wasn't. And, okay. That ought to work a little better for you. Sorry about that. Okay. And there you go. Nice pretty chart. All right, looking at oil inventory. Coming out yesterday, so I'm going to back up a little bit. And that came out between 10 and 11. Right on over here. So between 10 and 11 right there. Moved on down. Actually exceeded the expectation to move, but pulled on back into that expectation by the close from 10 to 11. So would have worked out, honestly, really good for a strangle or a butterfly. Strangle, you would have taken, or straddle, you would have either taken profit when it broke out. Butterfly pulled on back in for you. That let you finish strong on the trade either way. And just some great expected moves going on in throughout the day. Oil, obviously looking for some, shorts and everything going on into oil. Let me go ahead and chart something out over here. Let's look at the day's plan on this and haven't dove too much into it yet. But, give me 1 second, gotta let it all load up. And get rid of the auto feature. I gotta set that as a default. Okay, let's see. Where is it? All right. That ought to help out quite a bit. Okay, so, just looking at today and potential trades we had a long right here at 80.90. That one shot up, and it hit both the first target at 81.20. We hit the second target at 81.55. That finished out that trade for a 65 pip profit. Right there. Had to stop at 80.40, but did not get hit. Did move down a little bit against us, but did not get hit. Going on forward, looking at what other trades we got, we just barely, by a hair, even though we had a massive volume spike, which is a pretty good clue of a reversal, but by the time the bar closed, it's about right near our entry, but also right at our first target. Let me see, I can expand this out a little bit more, maybe make it a little bit more legible. There we go. That's better. Okay. So I was looking for an entry to go short at 85.50. Didn't quite, like I said, hit that one right there. If it does come on up and pull back, then I still do have a target for going short up at 82.50, and then I have a slew of profits taking profit there, 82.20, 81.70, and 81.40 respectively on the way down. So we do get back up to that level, and then where would my stop be? Be up at 83.05. Okay. On the way back down, if we get another bounce, we may get a little bounce and oscillation today. We don't have a lot of time left. We only have an hour left in the pit, so don't get too overly excited. But down on to 80.90, may move up to 81.20, 81.55 again. Maybe able to repeat that trade today. All right. So that covers us on oil. That also goes over the oil inventory report. Bringing us on back to the news. I had to close everything to get everything back up and loaded for you. But right over here. Okay. And we'll go through a couple other day trade plans today, too. But let's get through some of the news reports that we talked about yesterday and the end earnings announcements. Just like to make sure you're getting those each and every day so you can get them consistently from me. Let's see. Going on down to the 23rd. So that EU Economic Summit for tomorrow. So there we go, 23rd. All right. Like, wasn't updated. So that's the EU Economic Summit. That starts today, so you can have some, weird and wild, crazy announcements coming on out. Just don't be shocked if that happens. We got the Euro variance reports, so let me bring these on up for you. Okay. Euro variance reports coming out at 3 o'clock. There was just a whole lot of them coming on out there. We had the pound CPI, and of course, this morning Comcast had their earnings release. Yesterday, after the bell, AT&T had its earnings release, impacting the markets a little bit overnight. Had a little bit of down movements there, and then I've had some New Zealand, information, NAB information, China information. Main trade last night being the pound dollar, and that was on their mortgage rate approvals. So their RBA and their retail sales. With that, let's go ahead and take a look on over at this contract. Okay. And let's take a look at pound dollar. Here we go. All right. Bringing that one on up. Format my chart. All right, we'll cover this when we get back right after this break. There.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So what we're looking at was the pound dollar retail sales report last night and at 11 p.m. to 7 a.m. Time frame going in on there. And to see, is it bigger or not than most volatility moves? And so if we go back to our 11 o'clock hour, take it down and back on up to the 7 a.m. expiration. So right over here, we're going to get a move of exactly 30 pips on the dot. So we expected 30 pips. That basically been a break-even trade. Also helps us know that that was the expected move. To tie into that even further, we did have an entry earlier in the morning right there on the day trading plan to go in and buy at 60.10. And since it already expanded past this expected move, then that would have been a potential risk on the trade, if that makes sense to you. So if I'm looking at an entry to go short, but I'm like, this is as far as I expect this market to go. I don't expect it to go more than 30 pips between 11 o'clock and 7 o'clock based on this news report. And this is where we're adding in that fundamental analysis piece, okay? Really important. This is where adding that fundamental analysis piece comes into place. If I go in here at 11 and we've moved down, we're down, say 30 pips right here, and there's a trade to go short. I don't care what system or signal it is. Use extreme caution because it's like hey, for the next hour at least, we don't expect it to break below this and actually go anywhere. And really probably to stay within this range. So, and then, just look at the expected moves. Is there an expected move it's going to get down to the target or not? So understanding that fundamental aspect of that news trade really could have helped you if whatever system you use had a short trade plan right there. Okay? That's one of the things I try to teach people is don't just, use the news, not necessarily to trade the news. Maybe you're not doing straddles or strangles or condors or, butterflies, but they give you that edge. They let you look one step ahead of the markets by being able to see the expected move and going, it's one more as like expected moves, but on fundamentals versus just on implied volatility. And it's helped me tremendously because I'd be like, I don't think this thing's going to go further. I'm not going to take that entry. I'm going to leave it alone. And it's been just like hitting it. I expect it's probably to bounce, not to go back down. Okay? So if you can start grasping that use of the news reports I give you when I'm like, hey, 30 pips, 11 p.m. to 7 a.m., that is the expectation. So that may help you quite a bit, I hope. All right. Let's see here. Scrolling on over, looking at the what we got going on this morning. We already talked about the earnings releases with Comcast. We had unemployment claims come on out. Pretty much, if I recall, pretty much met expectations, if I was right on that. Oh, no, it was worse, but it wasn't that much worse. The expectations didn't weigh on the market, really. And let's see here, going on over, and let's check it out. We had the flash manufacturing PMI come on out right there. So that came in a little bit worse than expectations. Market not wanting to be weighed down by bad news, so never let that happen, right? And it's all about these earnings. So what do we have at the end of the day? That's going to be a big key, sort of how do we end up on this day. We have Amazon and Microsoft, okay? So this is a pretty big key for you today. Are the markets going to maybe do a pullback? If they think the markets are going to, fly up, a lot of times they like to do a pullback in order to get ready for that pop. If they just stay flat to up, they may be getting ready for a down move of disappointing earnings themselves. So, Amazon's doing a lot of stuff to expand. Microsoft is doing a lot of stuff to get their phones out there and expanding. They're doing product placement everywhere with Surface. I know they've had a really hard time really getting that market home. They're trying all they can. But those are going to be the two big key earnings, and they are going to happen right before the bell closes, okay? Like at 4 and I want to say 4:10. Let me see here. I got the times confirmed. This is the wire release times. It's not the conference call times. So 4 and 4:10, obviously having the largest impact on the NASDAQ, but don't be surprised to see some decent movement on these today, and then they probably will impact the market into the end of the day. And just watch for that pattern. It pulls down. A lot of times they're expecting a pop. Pulls up. A lot of times they're expecting a drop. So they're trying to just basically position themselves for a better position. And we'll talk about a natural gas article that came out and look at how that played out when we get back after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. And we're just going through, we're looking at the news and going through the plans put them together. We were talking about checking out a potential natural gas trade over here as well. So I want to get that set up for you. Give me 1 second. We'll bring all that up, close out some of these other charts from earlier in the show, and open that chart on up for you. Let's see. Let me get a different one. There I go. All right. Let's change this one up to natural gas. And all right, so on natural gas, it's taking me just a second. There we go. One of the trades we were looking at over here was the ability to basically trade off of the natural gas oil inventory report. And let's see here. Try to grab the stupid screen. There we go. Come on. Let me have it. Not responding. A little technical difficulty here. Maybe if I can close it down. All right. I'm going to copy it. I'm going to open it in a different browser. All right, there we go. That some shockwave flash load issues was causing the problem. Okay. So looking at this is an article put together about different ways to trade the natural gas inventory reports. Every Thursday morning, the report comes out. Just about every Thursday, unless there's a holiday or something like that, comes out. It's released. If the inventory is higher than expected, then the gas market would theoretically usually drop, and if the report is lower than expected, it usually would rise in price. Things don't always go according to fundamentals, but that is at least the general expectation. And I was talking there's a few ways to trade the report. And so I want to go through a few of those ways with you while we're looking over a natural gas chart. And that's why I'm just trying to get that one up for you. All right, there we go. Got it loaded. And so the ways I was looking at it is, one, of course, I always use my deviation levels on any trade that I do. And I want to make sure that I'm on the right contracts, the right months. And the report's going to come out at 10:30, so you can have something like Forex Factory or something like that opened whenever you're going to place the trade. And you can look at the binaries, you can look at the spreads. There's, like I said, there's multiple ways you can trade this report, but it can have some pretty big moves. One of the biggest things about these moves is you want to make sure that you are looking at proper expectations. So let's go ahead and let's add in expected ranges over here. With those expected ranges being added in. All right. So now we can zoom in a little bit tighter on it. Like I said, a few ways to trade it. So you can use, magnet volume price levels. So, and that, basically that's sort of, plotting it going towards the expected channel there. And it's made its move. So you can look at volume, you can look at 5-minute, you can look at 10-minute, you can look at 15-minute levels on 5-minute charts. You go through, just pull all those up. You can also pull up, spike strikers, which is one of my favorite ways to look at things after a news trade. And often on this trade, you may want to be looking at, potentially looking at using, Nadex like daily binary contracts. So let's sort of try to shrink this down a little bit. I know there's a lot of text going on there. And, we'll shrink quite a few things. Let's just bring it on down here. And I'll make the text a little bit smaller, just the way these are plotted. Be a little bit difficult for you to see out there. So let's try 12. See if that gets it a little bit more legible. Yeah, that's a lot better. Okay, so anyways, volume spikes on up, and then we get a short sell. You could do a short sell going into end of hour in the money. That would have been profitable, and that would have been a current hour expiration. That would have been a 12 o'clock expiration. Okay, and that would have been an in the money contract. Another trade setup you could have done could have been you could have done an at the money expiration, which would have also expired in the money, like say for the following hour. Another possible trade is targeting down to like let's say the 0.5 deviation level, going right back down to pretty much where it was before it started, as of the expiration right there, and looking at that as a potential out of the money trade. Okay. So first thing is we're going to set up a chart. We can look at 5, we can look at 5, 10, 15. We can look at whatever. I'll just put it on 5. Make it simpler. It makes the charts a little cleaner for seeing the entries there. And so again, one of your choices may be to go in, and I don't talk about this a lot, but looking at your daily binaries versus your intraday binaries. Let price move up or down. Ideally by at least a deviation. It doesn't always, not necessarily always going to move that full deviation. Let's see, what do we get high to low today? Let's check on the high to low deviation marker. Got pretty high. Ideally, just at least to hit a new deviation level. But maybe, a deviation move. On that, often we don't get a full deviation move on a natural gas report. So you wouldn't want to necessarily require that. But it's approximately about a deviation move. It's pretty close to it. So maybe about 0.7 of a deviation move. Look at that channel. Use it to target your out of the money strikes on your channel borders. So the idea here being to go in and it flies up, and then what you do is you pick the end of day expiration, like 2:30, and you target this border right here, okay? And so you're targeting 36.07. You look for a binary strike at that price level. Since you have one at that price level, then what we can do is we can go in and go, okay, well, what was the price? What was it valued at? So let me log on just to the Nadex demo platform. Has something that the live one doesn't have yet. Their charts are working on the actual binary pricing. So let's pull that up real quick and look at it. We got indices, or not indices. We got commodity binaries. We got natural gas. We got daily. Okay, so I'm right here inside the Nadex platform. And what are we targeting? Around 36.07. So we got the daily contracts. So go here to 36, 20. And let's look at the quick chart. Quick chart ought to show us the actual binary contract itself. We have to zoom out a little bit here. Let's make it give us less time, more time. See if we get this thing to fix. I know they're working on these little charts. These are new charts they're adding in. They're trying to plot the binaries out, and they aren't exactly the most astute at doing so. Am I right on my price? Let me make sure on that. 3,600. Oh, 3,600. Oh, 3,620, 3,600, yeah. I think it's plotting like right at 70. Let me try that quick chart one more time. Yeah, it's just having an issue. Unfortunately, I wanted to show you the price. To give you an idea, we were up at, let's see, how far were we above this price? We were about 40 ticks higher, okay? And at 40 ticks higher, there's 40 ticks between these. So just to use the price ladder model, that would be, the sell would be right around $90, maybe a little bit higher, because it was a little earlier in the time, right around the expiration. So maybe, 80. So, $80 sell. You could buy it back right now for 60, and you would take a profit on that trade. And that's basically just letting it take off and then targeting the retracement on back down. What would even add to your confidence to do so is right there near the top, you actually got a spike striker to go short. Okay? So, simple trade pops up and then target the bottom of the channel there. Now, you could go in a couple different ways. So if it flies up, if it flies down, let me see here. And let me show you this one. Okay, so this is an example. Basically, right here, you could have went up at sold. You could have sold like right outside the range. You could have done a butterfly. So you could have sold the 4160 daily expiration with a limit order of $30. You could have bought that 3920 daily expiration with the limit order of $70. And you can wait for the market to move to fill either order. So basically, if it just barely got to the top or barely got to the bottom, it would fill either one of those orders. A lot of times on the oscillation, you could get both hit as well, okay, which would be good. So that's a way to go in and butterfly the trade, along the way. And let's see here. I'm just trying to go through a few different ways you can trade this port. We got Spike Striker. We got, after it bounces up, it starts pulling back, target basically the retracement to the previous price. We have a butterfly set above and below, but it may take oscillation to get hit. You may only get hit on one side, okay? Sometimes you get both. Sometimes that implied volatility goes high, so high that you get both. Now, you also could go in, and you could use the expected ranges on the hour for the port that it's released, for like at 10 a.m. To 11 a.m. and looking at maybe at a, again, a daily binary contract. At the beginning of the hour, look for strikes just outside the higher or the lower range and set that limit order. So, and then go in and set a take profit to buy it back. So if I sell it at 30, maybe buy it back at 6. If I, buy it at 70, whatever, then, sell it back at, a little bit, 94. Okay? So just, simple, that's your butterfly. So it's buying down here, selling up here, and taking profit. So we got just, when it bounces up doing a pullback, we have doing a butterfly. We also have the spike striker report. So just going on the volume spikes and doing the fade right there on the volume spike. And very simple. So those are a few easy ways to trade the trade. You also can even look for, and add one more way to that, you could look for a straddle. So if you can find a cheap enough straddle, that is also a possibility. Let's say you could get a $50 straddle. Maybe your tent's not even to take profit. And let's say you buy one up there and you sell one down here. If it expires above one of those levels, you're going to make $50. If it costs you $25 to buy the upper one and maybe costs you $25 to sell the lower one. So, so get at $75. So the biggest point I want to get to across on this, and, props to, Lori and Sherry and Cameron, everybody who, has helped contribute on all these, is just, think outside the box. You got options. They are called options for a reason, right? So, check them out, look at them, think about, okay, what are different ways that I can take advantage of this? Because it's, when you're just trading futures, which I love trading futures, but when you're just trading futures, you're basically buying or selling or spreading futures. Maybe you're adding options, but they have a lot of theta and they have less gamma and delta to them. When you're trading options, you can combine them with your futures. You can combine them with your Forex. You can even combine them with your, your ETFs, even these Nadex spreads you combine, like US 500 with spiders. I don't know why you would. I don't think it's the best use of money. I think you're better off with ES, but if you wanted to, you could combine, their small cap 2000 with IWM, and you can combine their Wall Street 30 with the diamonds. There's a lot of ways you can combine things together to really reduce your risk and hedge your risk as a trader. And anyways, but I just thought that would be sort of a cool thing to share today, to, sort of looking over in detail, on that trade, specifically, and, how it worked. But, again, thanks to all the people that helped me put some of this stuff together. Let's see here. What else do we got on the list for today? And I got a few more things that I really wanted to go through with you. You got the natural gas spikes. So I got unemployment claims and earnings. Talked about the earnings for the end of the day that you really, really need to be aware of. And let's see here. What else do we got that I want you to be aware of for tomorrow? Let's get that stuff knocked out and go into it. And right there we go. Okay. Sorry, sort of hopping all over today. A little bit different trade show. All right, so tomorrow we got an EU Economic Summit. We got the German Consumer Confidence Climate Report coming out, and pound preliminary GDP. That could have some impact. It's really inconsistent. Like, it's a big mover and a no mover. We get back. We're talking about important earnings for tomorrow. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. And we got natural gas. It did go down. It went ahead and hit that 0.5 deviation level. Moving on down. Next target being 0.7. So looking like it may move on over. If it hits that, that'll put it on up to about a 1 deviation move on the day. It could move on down further to the 1 deviation from settlement as well. I guess we'll have to wait and see on that one. Let's see, going in, and we wanted to look at what do we got for tomorrow that's on the list that you need to be aware of. That's sort of where we left off on the show. And so I'm pulling all that up for you right now, checking out a few different trades as well, trying to see if I can maybe find anything that we might be able to take advantage of while we're on the show. And it always makes it a little bit more fun, but I just got to keep scanning to see if just a good one pops up at the right time. Okay, let's see here, going over a little bit further. Yeah, we keep having that entry bounce off Aussie, and I'm starting to wonder if Aussie can be able to even hold that. Okay, let me go back on over. Look at what we got on our specific news plans over here for the day for you. And what do we got coming up tomorrow? Well, we got Economic EU Summit Day 2 coming on up. So just be aware that's going to be rolling on out there. We also are going to have the Consumer Confidence Report coming out. Consumer Climate Report change, whatever German report coming out of that. It just obviously have a little effect. German pointer PDP, talking about that being the big one to be aware of. Tomorrow morning, we're going to have Procter & Gamble opening up at 7 a.m. So in the Dow, one of the lower, but still, top 10 there, weighted stocks in the Dow. So the ranking cap. So just be aware that can definitely have some impact on the market opening upon how those numbers come on out. Big number U.S. new home sales being released. And we've had some pretty big, good numbers coming out on sales. So seeing how the numbers come on out tomorrow with the new home sales will be just one of those, obviously home sales is supposed to be, indicative of a improving economy, et cetera. So if new home sales continue to climb, that will be a good thing. But expectation between 9 and 11 a.m. is about a 30-pip move on the euro dollar. So we'll be looking at a euro dollar iron condor for that specific trade setup possibility. Okay? And then what else? Is there anything else? Not really. That really is going to wrap it up. I mean, we'll have a couple things in the weekend. Britain, Europe, Switzerland, all those are switching over to their daylight savings time. And then on Sunday, New Zealand's going to have a bank holiday. And Euro is going to be releasing a bank stress test in the afternoon. So on Sunday afternoon. So be aware, any of you FX position traders holding things over. They've been having a lot of rough news come out. So depending upon how that works out, I mean, it could be great, could be bad. We have no idea. We'll be opening up with Merca releasing before the bell there on Monday morning. And we'll have pending home sales. Pretty light. News releases on Monday. That'll be a $30 iron condor coming out on Monday for you. That night, you don't really have all. We have yen retail sales coming in at $7.50. Might be a little big of an impact right now because so many people are really watching the retail sales numbers. But just make sure you have it on your, be aware calendar. And like I said, I was trying to pull up just a couple charts to see if we could maybe grab something before it all, wrapped up. But, we only got an hour and can only go through so much. We got Aussie dollar right now pushing down right there and right off that entry. So, all right, we'll stay right there. And we have another great show coming up for you right after this.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.